And welcome back to the RationalInvestor.com's Daily Brief. Welcome back to the Frivolity. It's here we are Tuesday. And welcome back to the RationalInvestor.com. I think somebody just blinged me, so I'm not quite sure. Not going to be able to answer PMs now, but we'll answer that in about an hour or so when we're done. Anyway, good morning, everyone. Tuesday, 10th of March. Unfortunately, this is going to be a bit of a slog here. I've been doing lots of rants about planetary cycles, and really, Ides of March are coming up here in a week or so. This is going to be a mess for the next couple of weeks. Full disclosure, I want to be a demonstrator of best practices, so I did go and buy a bunch of W's here recently in the stock market, and unfortunately today I had to do a lot of liquidating. Here's an example. I really like this little funeral home company. It was one of Kavarkanator's ideas, but if they can't hold the lows, you got to respect the plan, so I had to walk away there. There's also a couple other stocks that I had to blow out, so it's kind of a pain in the ass morning, but nonetheless, it's a trader's life. I am actually, and if anything, maybe it's sort of a karmic reward, but I'm actually, wrong screen that you are sharing. Whoops, what screen am I sharing, I wonder? What the heck am I looking at? Those are all those guys over there, and I know we have a bunch of, it says resume presenting. You might have to click on my picture. I noticed that, YouTube is showing, recording this screen, so you might have to click on mine because, actually, and that's a good dovetail. We've got a special treat today. And if anything, like I said, Brian had to take a couple punches in the nose here this morning. Wonderful. And, it's one thing to have paper losses, but, to actually have to realize the loss, that's another. It's no fun. The karma goes both directions, I suppose, and hopefully I'm a demonstrator of good practices, and at least I do what I say I'm going to do, blah, blah, blah. And the universe rewarded me with a really special treat today, and all of you guys are getting rewarded, in that we have two TRI OGers. I think they came to TRI about middle of last cycle. It was a lot of fun working with them. In fact, they're such nice people. They even put me up when I took a trip over to the UK there a couple of years ago. And we even had one of the gentlemen here in Vancouver causing trouble last summer. So these two people, I love them. They're dear to my heart. I think they're both incredibly intelligent people, and we have a really special treat today. In that we have a presentation by Raf and Bobo on the 4.669 relationship. And actually, they put a lot of work into their presentation. They got PDFs and stuff, so I actually wouldn't mind. In fact, I suppose we can get off of that screen now. I wouldn't mind, Murad, if you do the write-up of the video later on, if we could maybe put the link to their PDF in the write-up. And actually, if Sjord, if we could tag this video, if you're watching this later on somehow, so that people could come back and make reference to it later, because this is going to be a really, really cool presentation here today. I'm super stoked. So with that said, as you can see, it's about 9 minutes past the hour. They told me that it's about a half an hour presentation. So I thought I'd just do a market overview. Unfortunately, there's not a heck of a lot's going to change, and as I said, I'm in sort of damage control mode now. That the markets are basically breaking down here, and a lot of these little ideas we had recently, they're starting to fail, so I had to walk away. As well as just a simple overview of what I'm seeing, I'm not actually quite sure how we want to do this. I think what I want to do is as I said, hey, there's Sjord. It's actually encouraging to see that, hey, there's actually a little bit of green on the screen today. But I don't know whether we can actually take too much confidence in anything that we're seeing out of stock markets right now. As basically the news headlines are dominating, we're all about, coronavirus and it hitting North America and basically shutting down the United States kind of idea. And it seems to me that we're probably, this will be the catalyst that will break this economic cycle's expansion. You never know exactly what the reason is going to be. I do find it interesting that, the astrologers and all that sort of pointing towards health as a major concern, and boom, the crisis is going to be a big flu bug. So, just funny astrologers. I don't know, Craig. The problem with this market is, like I was putting out, Craig just asked, well, do you think we're going to see new highs on the stock market? And the problem, I've seen this happen before in the past, where they rip the market down. What I wanted to show you was the Dow chart that I put together, but maybe I put it away. I'm actually thinking I really like the idea of, I don't know if I have it on here or not, though. Where the hell did I put it? I did up like a tweet saying, and I don't know if I have the chart handy or not, that this is sort of what I'm seeing. So I do know that we have a fairly significant celestial event coming up here at the beginning of April. I also noticed, too, that interestingly enough, Easter is really awkward this year. And then also, as sort of a dovetail to the level 3ers in their program right now, if you go look at like the options open interest on things like the volatility index, to me, I'm hearing and seeing data that suggests that we're going to be weak right into the end of the month. But then once you get on the other side of the first week of April, all the put open interest just all disappears and it goes to all call open interest, which in itself kind of leads me to believe that even the higher ups are thinking that, and remember the VIX index is opposite, right? So if puts are open interest and VIX is heading down, that means people are optimistic. And if VIX is heading up, the call open interest, that means people are pessimistic. So I do notice that they're, and what the hell, we might as well take the moment and just show you what I'm talking about here. Where do I have my derivatives information? Here we are. I found this fascinating when we looked at this in class the other day. If I look at the near-term April contract, something sort of jumped out at us, which was a bit surprising. But look at this guy up here, 23 put. Look at that, 186,000 contracts, 73,000 contracts at the 22s. 41, almost 42,000 at the 20s. So, the interesting thing is if they take the VIX out anywhere above 23, all of these options expire worthless. And it's interesting when you look at this data, if they do take the VIX out above 23, you can see they don't have their nuts in the ringer here. So, what do you think? Is there some incentive for them to keep a bit of fear in the market and keep the VIX above 23 here through this April 1st expiry? What do you think? You guys tell me. Bobo and Raph, you guys have both done the level 3 program. Does that speak to you at all? I hope it does.
Sure does.
Okay, that's good. Thank you, sir. I appreciate that. That's pretty compelling. And then the weird thing is, the weird thing is if you flip over and then look at like the next contract series out, you notice that there's 22s. There's a couple there, but if we go out to the big monthly expiry, look at all this. Holy Jesus. Now you can see the open interest. Well, it's still pretty heavy up here, so that's maybe they're going to keep it fairly weak. I guess what we noticed was, now look at the size of these numbers starting to build up here on the call side. So do they really want all of these calls to expire in the money? My hunch is no. Notice that when we go down to the puts down into here now, and maybe they're going to expire at somewhere around this level. I don't know. But I don't know. It just seems to me there's a hell of a lot of calls building up there, and I don't think they would want these to expire in the money. We'll see how it goes. Actually, I've noticed that these puts are actually starting to build in size again. That wasn't the case the other day. So anyway, the point of the matter here, just in the short term, and this is where I'm sort of looking for that pivot. These numbers really jumped out at me. And I don't think that the fear in the market is coming out until this expires and they pocket that money. So, there's your backdrop. I mean, it's cats and dogs living together. Thought I had on that Dow chart, but anyway, it's not really that big of a deal. I mean, just absolutely insane volatility right now, folks. I don't think it's a good idea to be picking trends and stuff. And if anything, I almost think we have to, me personally, I'm going to let the dust settle here a little bit and just let things calm down a little bit. I'd also be very leery of gold in here because now that the oil has done its big thing, notice yen, bonds, gold, all, bit soft. Stocks, interesting, corn can't find a bid just yet. Stocks and oil are bid up, and remember that oil actually hit that big objective there yesterday. Well, I mean, it doesn't really matter. We can put it on here. Actually, I think I have, yeah. So, I mean, I don't really want to be investing in oil. I was actually kind of hoping this would just be a long, slow bleed. I was a bit surprised they did it in bang, one day. I wouldn't be surprised if oil now finds some sort of footing and we work our way back up and actually test trend lines from the other side. And that, unfortunately, I don't see how that's positive for gold. So be careful there, gold bugs. Please be careful. And I also noticed too when I looked at things like the nugget and the gold stocks. I mean, this is not what a bull market's supposed to look like. So something's not right here. And of course, gaps all over the place. Welcome to Volatility Central. As I had sort of mentioned just there briefly earlier, and what I was talking with the boys before we got the video call going. I mean, I had to basically just sort of rein in a lot of stock positions over the past week that, the charts are breaking down. So, right, let's go into capital preservation mode. Now is not the time to be a superhero, but I am super interested in hunting that late April or late March, early April pivot. That, and let's see whether it El Tango naters itself out here. This is actually almost exactly opposite to the three-step setup that we have in the library. So all sort of like, let's see, do we have it in here? I thought we had it in here. Three-step setup. So this is, in this particular case, this is one where the markets move to a harmonic objective. It happened to be a higher time frame objective. Divergence starts coming in. Price structure chart starts coming in. And then the trade. So in a weird sort of way, this is the exact opposite what I'm thinking in the stock market. We got to wait for market to come down to location. Let's hunt for divergences. And then if the structure comes in, and I'm thinking near the end of the month, then go. So there's really no hurry whatsoever in the stock market right now. And our meeting tonight is probably going to be, the theme of tonight's TRI-SOF meeting is probably going to be like, we're just in cool your jets mode. Not really a hell of a lot to do right now. So there's your backdrop, and I guess it kind of makes sense. The bull is finally unwinding here. And you just got to go into cleanup mode. I will mention, which I was actually super stoked about, and that's why I love this website and the community. I put out, just an FYI for you guys, I put out a request from all our OGers to help me clean this harmonic cheat sheet up and get it a little bit more accurate, if you will, in the numbers and the levels. And Steven, who's a big harmonics fan, went into the document and put in a whole bunch of notes and crisped up the levels. So thank you so much, Steven. Big shout out for you. He even included a link to Scott Carney's webpage there on the document. But I do know, like Owen, he had been saying for a while, hey Brian, you got to clean this thing up and crisp up some levels. So that's now in the library. If you do like harmonics, this is a great little cheat sheet just to have in your back pocket. And of course, if there's anything else you can suggest to make this any better, I'm all ears, of course, as always. So I want to mention that. Also, just, quick comment about the corn. We've kind of talked a little bit about the market working lower. I think to a certain degree, crypto is sort of in that risk camp. It's just a question of the cadence of, who goes when. Heads and shoulders is and stuff like that. It looks to me like everything's just sort of working away here. I don't think we need to be in a big hurry to call bottoms. As I happen to have on here, this is April 10th. I do actually like the idea, same sort of thing that, the end of March, beginning of April, we should see some sort of pivot, but that means it's going to take some time here for this to turn. Watching things like Ethereum, we have our little sort of how long does it take for markets to turn? To me, it's gonna look something along these lines. So again, is there anything new to do today? No. I think caution is the better part of valor. This guy here, Ethereum, he's not even in trade location yet. So if anything, we got to wait for trade location, then divergence hunting, then structure, and away we go. And it's probably, like I said just a moment, it's probably going to take, a good next couple weeks to develop. And then the last thing that I'll mention here before we turn the presentation over to the boys is, altcoins. I don't see anything really pressing going on here. What I really do like is that I think that, first and foremost, these things are absolutely washed out. Colleen says it looks like there's a 4-hour bot on ETH working. That wouldn't surprise me. Keep hunting those setups, and it's fantastic, Colleen, that you're at the point where you can start seeing this stuff. So now the great part about it, Colleen, is you can just basically go out and work your craft as a small business owner-operator in the business of trading. So that's great to see you making that progress, Colleen. Now you've got the information base, right? Now kind of like what Raf and Bobo are going to show you is now actually what we have to do, Colleen, is we have to put some miles under your tires. And you have to start sort of, now that you see the market from the TRI perspective, sort of that educated perspective, now is actually when the fun really starts for a person like you. And like I said, you're going to hear Raf and Bobo were in exactly the same position you were when they were starting their journey. And, you're going to be blown away by some of the stuff that Bobo's going to show you here today. It's quite shocking. So, fun! So the simple message that I would make here is what I see is a lot of these altcoins just bumping along the bottom, not doing anything. Is it a rip-roaring bull? No. Is it a face rip, bear? Sky's falling? No. To me, this just looks like a sideways market, which is great because nobody's really that interested in this stuff. If you can put yourself on things like dollar cost averaging plans, great, awesome. And while the rest of the world's sort of freaking out and all of those valuations are coming into question, the irony of it all is that I think you can actually look at crypto and start seeing value here. I am trying to buy one crypto. Actually, I've got a few bids on names, but, as an example of just me, I'm actually wanting to buy something. I'm still very interested in going and shopping for my real estate in Decentraland, so I can't do it without owning Manas, and you can see where I've got my price gaps and my 78.6s. So I'm just going to be patient and just bide my time. And that's the kind of market state that I think we're in here, man. If you can, I highly, highly encourage you to put yourself on some sort of accumulation plan. Um, because I do think that there's good value down in here. So that's sort of the market commentary. And if anything, I would be really concentrated on value. In this type of market state, unicorns, that whole unicorn kind of talk is probably going to unwind. And the irony of it all is, what's the one way to put Tesla out of business? Why not take gas prices so low that the consumer goes, fuck it, man. Why bother buy this electric vehicle when it costs this much when I can buy a gas vehicle that's only like half? So how ironic. They always say, careful what you wish for. You might just get it good and hard. People want cheap gas prices. And I did see people in the media talking about the one way that the oil companies could kill a company like Tesla is just take gas prices to nothing. And then all of a sudden, environment? What environment? And I thought it was kind of interesting that it turns out that we in the West have worked diligently thanks to people like Greta. And we have reduced our carbon emissions substantially. But in the interim, kind of sucks, but it's brutal reality. China has now gobbled up all of that carbon footprint savings that we've so diligently tried to put in place in the West. And now it turns out that 50% of China's electrical generation power comes from coal-powered power plants. And the irony of all that is that's actually the killer for the environment, and that carbon footprint was these coal-powered generating plants, and China's just literally gone and just filled in all of the I don't know, the reductions that we were. So in essence, we're still producing exactly the same amount of CO2. Nothing has really changed. How ironic. Crazy world. We're all going to hell in a handbasket. Anyway, so it's about 25 past the hour. Raf and Bobo told me that their presentation was about a half an hour long. I don't really see anything overly startling trade-wise. Like I said, I'm in sort of damage control mode now and not really thinking about buying anything new in the stock market. So if anything, I think this is a really good opportunity for us all to put on our learning caps, open up our minds to a little different perspective of the world. And let's pop on over to the good old UK. I think both of you guys are still in the UK. Do you even call it the UK anymore? I don't know. Do we call you Britain? Anyway, doesn't really matter. They're there. Who wants to go first? Is Bobo? Are you going to attack first, or Raf? What's the plan here?
So Brian, I'll go first. Can you see my screen with the PDF open?
I will. All right, we will click on you. And hello, sir. Great to hear your voice. Long time no talk. And oh, by the way, Bobo's a new dad, so everybody give him congratulations on that too.
Thank you. So if, assuming you guys will just stop me if you don't see anything. So basically, we're just going to do a quick talk on some targeting tools that we found particularly useful using our Fib extensions. We've got Chaos and Bobo PRZ levels, and there's also some really, really powerful work that Raf's been doing on the linear regression bands, which I'm sure you guys will really enjoy. So obviously, this is a presentation. We do need to realize that there are certain disclosures. This is just purely for information purposes, education. So use it how you feel free, but please don't come back to us. So what we'd like to share here is we've often used fibs to sort of find targets in locations for where we're looking to get out of certain trades. We'll walk you through how we used to do it. Obviously, the line in the sand has always been an interesting sort of level for us to sort of go and hunt and make sure we don't overpay for certain assets. And then also focusing on crypto levels of your 886, which I know certain members of our community made famous with various setups. But generally, after assets have sort of gone up and retrace, we look to sort of look in real sort of areas of value. What we've subsequently found is that there's other tools to help you find those locations and a lot easier, and you don't really have to faff around dragging and dropping fib extension tools all over your charts. You can actually just use a simple extension fibs. And what we'll do is we'll give you that sort of what we set and how we use it to sort of identify target areas and also potential reversal zones. And again, the word potential, if you've gone through any of Brian's lessons and tutorials and classes and levels, you'll understand the whole concept of potential reversal zones. Brian, I think you guys discussed potential reversal zones in level 3. So
right,
not there, it is. It is.
If you think about just the level 1ers, I don't want you thinking about AB equals CDs as places to put on a new trade. I want you thinking about, well, that's probably the end of the move. We don't know exactly where. As we sort of mature as traders, we can start opening ourselves up to different and broader trade location concepts. And the advanced students, what I want you to do is now start considering those AB equals CD objectives as now new potential trade locations at the end. But it's more advanced. I don't really like new people to trading to start at that, because I really need for you to get down the concept of M's and W's.
Yeah. And I think, Brian, that's the really cool thing is we've got a couple of charts to show that you can use this tool as a sort of trade target tool, and then the more advanced guys can be looking at those exact same levels for reversal trades. So at that point. So I mean it goes along the same sort of as you have taught us throughout our trading and our 3 levels of TRI, which is really, really powerful stuff. And then the last bit, we'll go through some linear regression, just a quick how do you do it, what's the easiest way to do it, and then also just using some of these specific fib extension levels that we've sort of found very useful, that we've hoped will the rest of the community will find useful. And then there's obviously our appendix where we've just thrown in a couple of charts just to sort of show you. So basically where we're at with this, and I'm not sure how many people used to do this, but we've always been looking at, we have a potential W forming. We may have various indicators, confirmed divs in our momentum studies, RSIs that are looking like they're turning around. We've got a whole bunch of signals, and we're ready to take the trade. We've got our entry level, and we say, well, where do we think this thing's going to go? What sort of location are we looking? And what a lot of people used to do is just take their fib tool, frame the M or the W, and drag it on up, all the way to the top. What we then would find, and this is really looking at the next chart, is lo and behold, it would actually, based on that M or W being framed by the 1 and the 78.6, it would actually trade to the target of $3.02. So that's really, it was just a way to sort of say, where do we think this asset would go after we've done all other sort of analysis on our trade? It was really just to identify, in this case.
So I'm stupid. So, think of me as your stupid student. I just want to try and understand what you're trying to say here. Yeah. Did you take your tool in the first image at the top? Did you take the 100% and draw it off the close and then drag it up so that the 78.6 is off that highest close of the W?
Absolutely. So basically,
and then when you
drag
do
it up,
that,
you sort of say, I think it's going to, basically, I'm looking at this trade. I feel it's going to break out through the 1.99 area. And if it does that, assuming this is now our W's formed and it's ready, where will it trade to? So it was really just a way we could try and get to that. Where's that target going to be?
That's interesting. I've never even contemplated that before. That's cool.
So Brian, the interesting thing is, I used to do this just to give me a target sort of location. I know Raf used to do it, something very similar. Raf and myself would also do this using the 886 level. And the reason we did that is because we know that some cryptos just love the 886, and well, crypto and sort of currencies tend to use that. So in this case, we would drag, if you look at the first one, we would drag it up. Lo and behold, it would also sort of come in at the 61.8 level. So now we're starting to see confluence. So we would say, oh, hang on, this could actually work really nicely. And that was the sort of thing that we were doing just to give ourselves like targets and just where would it go to.
That's kind of cool.
Yeah. So, but the best thing is that was the old way to do it. When we sort of we were listening to a Broiler Chicken show, and you'd sort of opened the can of worms on 4669, is we started to do some work with that, saying, well, I wonder what happens when we actually when you use that on our charts, and let's see what happens. And what we found was when you have, and I'm going to flick through, I'll come back to this, but basically when you have your extensions, the 0 and the 1, so we're doing exactly the same, and you drag it out, the extension 4669 was almost identical to our sort of 0. So on a 78.6, it was literally coming to the exact same value. So it was the same thing, which is pretty powerful, really.
Yeah, and so what is that? That's like 786 to 1 is like 0.28, 0.27 something. So 4.66 would be like 4.5 of those ranges.
Well, 4.66 or 4.672. So it's very, very, very close.
Huh.
So what we found is there was a lot of sort of similarity between those, and I sort of know why now. But the point is your 4669 was basically just an extension of what we were doing, but it's obviously a lot easier to draw, in this scenario, from the bottom candle up to the sort of breakout candle, a 0 and a 1, and then use extensions. What we then found was in between those areas is there were certain levels which were also acting really powerfully, and we've sort of given them a sort of our own sort of we've called them key chaos levels. So I'm going to go back to this. The sort of the next slide is we obviously wanted to do something similar, because after noticing the 78.6 line in the sand was working the same as the 4669, and I don't know what you've labeled it, but we've just called it the chaos PRZ level, is we wanted to try and find out, well, what was the value for the 886 breakout level. So the formula actually is you take 100% minus that fib level, and then you find the ratio between 100% and that level, which is 8.7. I'll let you go and use that formula on 78.6, 0.618, and 0.5, and you'll actually it's quite fascinating what actually comes out. But long story short, we've come up with a sort of a nice setup, a fib extension, and you can go in TradingView and save it, call it whatever you wish. But basically 0, 1, 1.618, 2, 2.618, this 4669, and then 8.77. That is the sort of fib ratios that we've been working for. The idea is you must frame your M and W. So when we talk about framing M's and W's, it's basically look at this little area and frame your W that's forming. If you're trading on the short side, frame your M. Raf will show you basically on a chart later how he goes about doing it. The key point here is we have always been trying to use the entire breadth of the candle bodies and wicks and tails. One thing we've noticed, and it's entirely up to how people want to sort of do it, is we've found that generally we've had far better success in seeing our levels hit when we use candle bodies and or sort of your closed, or if you're using a line chart, the closed values. That's a personal preference, and that's a preference that we've worked on, but I suspect it will work for candle bodies, wicks and tails as well. This is just us. We've found that works better. Again, just the main point here is PRZ levels. The emphasis is on potentials. You need to be looking for at least 3 reasons. You need to find some sort of momentum indicator that you're happy with before you take any trades. Look for your structure, and then you've got your 3 reasons: location, momentum, and structure, and away you go. Some interesting reading on this Feigenbaum constant, the 4669. There's a really good YouTube video. I've put it in here for you to go and have a look at if anyone's interested in watching it. I think the really powerful thing about that particular video is they keep it really simple, explain to you how this whole chaos number started, where it comes from. They talk you through a really simple example about rabbits, how it works. And then what the fascinating thing, I think, for everybody is when you look at chaos and what chaos looks like, there's actually order in that chaos. And I think that's what really this number is talking to. 4669 is a number which is very specific when it comes to recurring fractals. And recurring fractals is interesting. And I don't know if you guys can see my screen. I've just flicked it over to a sheet. This is effectively what's covered in that presentation in terms of, and this is a particular example about breeding and rabbits and how when you add more rabbits into a population, how it sort of blows out. What is really powerful is this structure that starts being created is that 4.669 is effectively the ratio between these levels over here, and the next level will be 4.6 of that and of that. So it's effectively how fractals are formed. I'm not going to go into more detail because I think it's up to people to go and actually have a good look and see how that's, or figure out why that number is so important. But there is a link here.
You can go into as much detail as you want. I won't complain.
Yeah. But it's really, it's I don't know, this stuff, I think once you open up the can, it just sort of goes crazy. And, I think I had an image here is this is supposedly chaos. And I don't know about you, but I see quite a lot of order in this chaos. And, when you start looking at, these little areas, the star areas, and when you start looking at these little white areas where it goes from chaos to certain numbers, you'll be fascinated to see what numbers pop up. The constant reoccurring 1618, the golden ratio, the 78.6, I'm not going to just this 78.6 level. As you increase more, 4.669 ratio, it's just mad. I think I'm not going to carry on because it just drive you mad. It's actually beautiful if you love that sort of thing.
Yeah, you said drive you mad, but I was going to say this is like almost poetry.
Yeah. So anyway, so the number is what it is, and the really powerful thing is we've come up with an additional number, which we think sort of, especially in crypto, is you often see your target traded to, and then it actually carries on and does twice the move again. And we certainly had a lot of success so far on this 8.77 level. But then again, it's up to the pros to go and have a look at it and see how it works. Again, here is the tool. It's a simple drag it, frame your MOW, and then go and have a look at the other levels, the 1.618, the 2, and the 2.618. Very, very interesting, because as it progresses, you will notice that those levels then become major levels of support and resistance. So in this example here, you'll see it trades to the 4.669 level, comes back, trades to our 2 level, goes back up, trades back to the 1.618 level. It's uncanny how these sort of levels are traded to after you've just projected it when the trade was down at the bottom here. So that's just something we've worked on. Again, we've just called out, we use candle bodies, and we use the first part of the W to frame our trade. Very similarly, here's the example of the 8.77. We don't hit that number blindly. Here we've looked at our projection is taking us, there's some confluence on a 61.8 level. This 8.77 target area is up here. We've called out where our key chaos levels are. And if we fast forward on the trade, you'll basically notice we go on, we hit our 4.618, we trade back down, keep tagging all those key chaos levels, and then come back to this level, tag it, and then we dump. And surprisingly enough, I think this, if I remember this chart, we traded this thing about 4 or 5 times, and it within a couple of pennies each time. It was phenomenal. Fib extension observations. So pretty much like, I've added these the 2.168 and the 2. If you go and have a look at how, if we did it the old way and we did like a projection tool and we were looking for sort of the 618, this 2.618 would effectively be a 0.618 retrace, and the 2 lines up with 0.5. And I know that's obviously something for you guys to go and have a look at, but there are certain relationships here that when it comes to your target level and your breakout, depending on how far it goes from the W that you framed, it's very, very spooky, shall we say, when we look at these key levels that we've started working and trading to. This was talking to the exact point that Brian was speaking to earlier. Is we use this in 2 ways. The first way is to identify a target area where we're looking to exit our trade, and the second way is basically we've now had a big move into one of our chaos levels. We're using it to actually sort of take the reversal trade. This is an example of one of the trades that I think Raf did, and it just worked beautifully. But Raf will now, if Raf can just share his screen on the, and he'll just sort of show you how we set this up, and then sort of what he looks at
just quickly
when he takes his trade.
Okay, so we'll pop on over to Raf now. Is that?
Okay. Hey guys. So I quickly show you basically how we put those extensions on. So this is like the Forex trade I've done. I've done the second part of it. But basically what we're doing, we find first like this opposite structure going in the other direction. And you can frame, you draw it like using candle bodies charts, and like you basically look for the first M that appeared on the line chart to be easier, and you like drag it nicely here, and you see that we stop a little bit on the 4669 here, but then continued. But what was the trade actually I've done was the trade here, which was really nice 3 steps as well. We had like the diversion on 4 hour was even better. So I get in on the confirmation on the diff on 4 hour and on the little retrace later on. But what you do then? So you basically what I do, I sell half of the back, like half of the position, like on the 2 to 1, and then you can really have fun with those chaos levels sometimes. Because for example, this one just retraced just on the thing, just on the hold on, yeah, like that. So we just stopped here. So and if you wanna like do the other way, then you look for the diffs and stuff and trade it other way. Also
actually, Raf, on that one of the things we have noticed, which is worth pointing out, and then this is stuff that when you work and you're using these levels, is when you and Brian, I don't know if you've noticed this, but basically if it trades up to a 4.669 and you get a gap and it gaps through that level, you can actually expect it to go further on to the 8.77. And that's sort of very similar to Carney's talk on his various patterns in terms of it's only a reversal when it actually puts in an MLW around that area. Be wary of gaps, and when you do see a gap, look for the trade to continue down to the 8.77.
Yep. Yeah, and having like the big M now drawn, you can like draw another one and see, for example, here how we like obeyed 4669. We still not that low. Probably we're not gonna go that low. It's forex market, but you never know. But it's nice to see the validation of the level that it didn't close below it. So the level is strong. On the second chart we've seen on the Bobo slide show was that trade. It was the fail one, but I didn't have actually the reason for it. I traded as a little bit of as the test of those as well. But what we can observe here is that when we went through 4669, we even went through like both 877s. We had like the two M's here when I drawn. We passed through, but then we came back and recheck it just to like kind of validate it, and went lower. Yeah, then for example, you can draw another M and you got another target. For example, here 469 passed through and 877, and look for your reasons here. It's no diffs, so probably stock market gonna go lower. What was cool I found was how nicely we draw the bottom on Ethereum chart into the new year. Basically, I've like projected levels from all of the M's we had, and all of them like confluented into like one area basically. So which was this is what you need to look for basically, for like you like measure those M's and they all spit in like the same level basically. Which makes it really strong level. So now for example Ethereum, hope it's not gonna go that low, but yeah, we got like 150 as a 4669 now. On Bitcoin we got similar measurements. So Brian was I think 6400. My is 67 now. So let's see, how it's gonna develop. And
yeah, okay, so that's interesting. So the zero line you're doing off of the highest close candle body, and then
correct.
The measurement line is down to that first stab low clothesline level. Yeah, right in there.
Yeah.
Okay. So could you not also do a little study off of that tight little M range up top there? It'd be interesting.
Yeah, I just noticed that. You mean this one?
Yeah.
Yeah. So so we hit like 877. Oh, that's interesting.
Yeah.
And,
so there's
the key,
a couple working there.
Yeah, and I think the key here is there's the small M and there's normally the bigger M, and what you find speaks to you. I know Raf likes the second M. I also like the second, but I've got a caveat. I like the second small M. So you don't always get them, but at the end of the day, this stuff should not be used as one tool. We would obviously highly recommend you still go and sort of, in this example, from the 16th of December up until the middle of February, draw your old fib tool, have a look at other fib areas that you would potentially look to be a buyer, the old reload zones like we've always been taught, and then look for confluence.
Yeah, if you do it like that, exactly.
These 8s and 7s and, the 8.77 and the 4.6, you have to look for confluence on both of those. This is just an additional tool to what we've already learned. And Brian, I don't know if you're probably seeing exactly the same thing. This isn't the this isn't the golden, like goose that's just sort of decided to land on, in the ballpark. Actually, it's just an additional tool. So what this is showing is if we're happy to go with that 4.669 on is this the Bitcoin chart on Bitcoin, it lines up with that 78.6. It's a confluence level that could be traded to. That's all this is. And I mean, we don't have to. I mean, I think we're all in the same sort of category in terms of we understand what this is, but we've just found.
So I'd be curious. Go back to that Bitcoin chart, Raf, if you could, and let's throw on your magic levels off of those lows. I'd be curious to just watch you in real time what levels you're gonna pick to draw it. So
hold on, yeah. So you got, this is not super clear, but you two W's I would pick. So just let me reverse it. So that would be
Okay,
the
so
first one.
and the question ultimately for people using this is why did you pick those particular levels to draw your study off of?
Because it was like first W drawn off the bottom, basically.
Okay, yeah. Can you just like zoom in, show us like why did you pick that low? Why did you pick that high? And clearly, obviously, the number. Look at that fucking target. Ay caramba. You know, so like, why the like? Okay, so we're taking that that lowest close,
Yeah.
and then you're what are you drawing it up to like the reactionary high there? Like, what? Why that second level?
Yeah, basically it was like the first part. It's a very sharp W, but yeah, it tries and put like the first like high basically, I would say.
Okay.
But this chart, this is like the very Bitcoin style thing, you know. Those W's actually, I would say, like
So
not
like
super
if
clear.
I was drawing this chaos study, I would have taken it from the right hand part of the W, the lowest part, back up to the middle part of the W. So I just just so people understand when they're watching this, what's your logic to actually drawing the two?
So you would do it from here, you mean?
Yeah, I would do it from that lowest low there, and I would drag it up.
Yeah.
In fact, I'd probably just go off of that most recent reactionary high, but somewhere in those kind of levels up there. So that's my logic. I want to understand what's your logic.
Well, but our logic is pretty similar. Can you see it?
Yeah, well, that's cool. I mean, obviously, that's a pretty darn good level. But as I said before, somebody watching this video later on, okay, I want to do what they're doing. So, Raf, I hopefully when people watch this, they see the difference between how I would do this and you guys do this.
Brian, and one of the easiest things that we've also done is and you probably found this, if you just turn the chart into a line chart.
Yeah.
So if say we're on the line chart and we say, you basically say to yourself, I'd like to trade the daily chart. Just go onto the daily chart, and then look for your first W on the daily chart. Mm-hmm. And that's if you're trading dailies. So here you might want to pull it slightly up, and then that's your, you would say, okay, it's probably that's the first W. So we always we try and look at the first daily and see where that comes out. Mm-hmm. If you're trading on longer time frames, go to the weekly chart and look for your first weekly chart, your first weekly W. Draw in your fib tool on the weekly chart and see where you go. Yeah. I think I've seen it because I don't necessarily trade on the shorter time frames like Raf does, but I've seen on the longer time frames, the levels are far more accurate. If you do them on dailies, weeklies, and weeklies, you get real levels.
Raf, do it off of. I want to. Again,
maybe let's see this.
I'm not debating this.
Yep.
What I just simply want is when somebody watches and says, okay, I want to do the study the way they do it, people clearly understand the levels that you're picking here.
So basically put it on a line chart and frame your W. So what we did there, Raf will show you, it comes down, goes to that level, goes up, and then breaks out through. That's all you're doing. And
exactly.
Yeah, let's look at that and really just let's look at the 4.66 level and see how powerful that's been there. Mm-hmm. And then you'll have a look where this thing sort of topped out and closed. It actually finished and closed at that 8.77 level, which is pretty phenomenal, really. Yes, you do lose out on all that extra FOMO, but if you want to go now, Raf, and just draw on a sort of risk reward and sort of calculate.
Oh yeah, well, sure.
If you are prepared to take these shots, this is obviously you need to go and have a look at your indicators, but 7.7, not too bad.
Suppose we could probably live with those kind of numbers.
Yeah. So, and I know Raf. I mean, this is interesting. Is we've called and actually. Raf sort of he has on quicker, faster 15-minute charts. There's obviously other ways that you can go and set your risk reward profiles. Raf, I don't know if you want to talk to that, but
you should dig in and try to Yeah, but let's leave it for like,
Yeah.
you know.
Yeah, I mean, this
Yeah.
is chocked full of value here. Don't
Yeah.
feel as though you need to make up. I mean, this is awesome. This is all TRI 1 + 1 = 3, right? I mean, thank you so much for taking the time and walking us through this. Very, very
Yeah.
good stuff.
But there is more. So
Oh,
So,
there's
Brian,
more. Oh, shut up, Brian. All right.
There's more.
Where
If
are
you
we
come
heading
back to
now?
Bobo.
We're heading back over to Bobo
So-
now?
Back to my screen if you can.
All right.
So, I mean, that's really, so again, just reiterate, you can use this as a targeting tool. So 4.6 and 8, that's where you want to go. And then you can use it to start looking for trades at these levels, the 4.669 and 8.7. Look for confluence. Confluence is very, very important. So making sure that it lines up with other sort of Fibonacci retrace levels, our reload zones. Make sure you look for that confluence. This is just helping you, giving you one more reason. The next bit we want to sort of look at is, and just sort of what we found is this 4.669, the 8.7, and the sort of the same sequence, but we've added two extras here, is just to have a look at when you're doing the study. We've added pi 3.178 and we've added 3.618. But basically, what you can do is you can take any chart in TradingView and you can actually find the actual trend line with a really quick indicator. What you can also do is you can set bands, whether it be an upper band deviation or a lower band. And what we've found is when you use those bands, when you start using 1.618, 2.618, 3.1, 3.6, 4.66 and 8.7, you get some pretty spectacular results in terms of giving you an area to start looking for trades. So without further ado, I'm going to take you through some of the ones that we've noticed. Now, Brian, you'll love this study. This is the TIPS, inflation and deflation.
All right.
Yeah. What we've done is we've taken a regression line from the low and we've just drawn it to where we are now, and we've thrown on a 4.669 linear regression band, and you'll be surprised to see where we touched out. The top level is we've put on a 1.618 linear band, and we're sort of trading into those levels just really beautifully. Bitcoin, from its high in July, has been in a sort of downward trend. So this is just a sort of a medium type trend, but we seem to be working off these levels pretty spectacularly. I think we've got a top band of 2 and a bottom band of 1.618. Now, Raf will quickly show us how to go and do this. I know Raf spends a lot of time on this chart. It's beautiful. It's got Gann dates. It's got planetary heat maps. It's got Brian's bottom date. It's just
Brian.
we love it. We love it. But anyway, so that's one of them. The other example, we've got an Australian chart here, which basically traded in 2 candles down to our levels. Phenomenal. We've also seen Pi working on the SPX very, very, very nicely. What else have we got here? We've got gold, really brilliant chart. This 40 years of a trend line, being tagged a few times, and then Raf goes in and he does a slightly shorter range, and we see those levels being hit here. We've got 3.618 being hit. And then we've got Microsoft. What we found is the 4.669 regression band is basically like a parabolic end move. So if you're looking to sort of use that as a potential reversal zone, it can give you some pretty spectacular results to hit trades at their sort of peak. Same thing with Apple. Where do we think Apple could go down to? Well, she's got some distance to go. And then Tesla. We spoke earlier about gaps through the 4.669 level. We surprisingly hit the 8.77 regression band on Tesla. So if you enjoy parabolic moves, maybe you want to look at linear regressions and some of these sort of constant numbers that we've sort of started trading with. So
That's
that
gonna
really,
Stuart absolutely loves that. So
yeah.
he's gonna have fun with that.
Yeah. So that's really cool. So I mean, really now, just Raf's Raf, if you want to just
Yeah.
what Raf's going to do is just show us how to do it. So how does he do it? Because it's like everything. Where do you start this thing? What do you do? What do you change? Raf's going to just give us a quick how did he do this, just so that you all know how to do it and start playing,
Yep.
yourself.
Okay, so I'll pop back on over to Raf. Now we're on Raf's screen. Go for it.
Yeah, let's just do quickly Tesla. So you can experiment, basically with those. When does it start, or whatever, or how do you measure it? I got to say that Sjord was the first one who showed that tool, and I started to play with it. But basically, what I do, I just measure what. Let's say that was like we can call it a button, and measure whole stretch of it, and then we put the right number in here. Sorry. That should be date range. And put the numbers here. And then we add the levels. We actually can do like only those positive ones. So yeah, so this is what we get through. When the price is going up here, they might be looking a bit differently. By 877 was always like on that level, which is quite spectacular actually, that we just targeted and then collapsed, So yeah, this is how we do it basically. And what I really recommend is just to have fun with it and do those measurements and see what happens, on those. Set alerts, look for diffs, and just watch, because they might work in the way you would like to work, basically.
Have you guys tried to do one on Bitcoin? Do we dare?
So I think there was.
I don't want to blow up your computer.
Yeah, there was one. I think we've done one, but we've only looked at really the downward trend. Yeah.
Ah, interesting.
The Bitcoin, I mean that trend. You mean? Yeah. Hold on. So.
Oh, okay. So
roughly, just I need to adjust the bands. Would be nice to have a tool which kind of speeds plenty of bands, like all the bands we need. Yeah, that I think this is the schedule we're running now, and just we need to get out of this band basically somehow. Hopefully he's not gonna lose the lows, because that will be quite nasty. But let's watch it for now, basically. But yeah, to be very precise.
And one of the key thing is when you do this linear regression, like test is always go from the high to the current candles, or from the low to the current candles. So that is the key. Is if you're trying to draw a line, you're obviously trying to draw a line from where we are today to today to either the high. So in this case, it's Bitcoin's high. We could do this study for a lot longer and take it, to the low, but always don't do it mid-cycle, because you're not really gonna. You're trying to draw a line through, key pivot areas. So start it at one point and end it at another.
Yeah.
That really just in terms of how you do it.
Yeah.
And what we've sort of looked at is actually use the middle line as confirmation of your trade, but look for trades actually at the bands, the outer levels of the band. And then again, you don't just hit it blindly. You make sure that you have confirmation of some sort of momentum indicator, and you're looking for structure to frame your trade and your entry. So yeah, it's the same sort of constant theme, and we really hope you enjoyed the presentation. If there's any questions, feel free to ping us, and we'll see what we can do to answer them.
Brilliant work. Do you guys participate in the harmonics room? Because maybe we can funnel inquiries into that room for this stuff. I'm not
Yeah,
quite sure.
Yep.
We're kind of getting
Yeah,
overwhelmed
but,
with different rooms here on the site, so I wouldn't mind having like a place where we can focus this. Let's maybe think about what's the best way to do this going forward. You know, from what I hear from Rob and Raf, they're open to you PMing, DMing. So I suppose if you do have questions, just don't overwhelm them, guys. They're doing this for free. They're doing this out of the goodness of their heart. This is incredible information. And, you know, the cool part about this, everybody, I mean, how deep down the rabbit hole do you want to go? It just keeps going and going and going. All right, guys. Is there any closing comments or anything like that? Somebody's saying here, are you going to share the PDF? I think we're going to put that link in the video write-up. So be sure to look for that PDF. You know, by all means, if you're going to go out into the public and make any reference to any of this kind of stuff, please give these gentlemen due acknowledgement, notice. I would be very upset if I saw people just blatantly copying this stuff. Thank you so much, gentlemen. Great information. Really good stuff.
No problem, Brian. It's a pleasure.
Yeah, excellent. You guys, you know, if you want to come on and show us some ideas, you happen to be in the neighborhood, and feel free. You've got, of course, open invitation always.
Oh, yes.
That's
Okay.
Great. So
Cool.
I hope Corby is treating you well. I hope the baby is letting you get at least a couple minutes of sleep at night, Rob. And of course, I'm waiting on my Bulgarian ski resort.
Yeah.
And I still got the money just sitting there, so I can pull the trigger any day. Anyway, great stuff, guys. Great stuff. All right, you know, we're past the top of the hour. I mean, I can't possibly top that, so I think we'll probably just leave it at that, guys. Excellent presentation. I don't even think we need to change the screen. Just such a beautiful image there. Obviously, you can see we're at a very key point here for Bitcoin on linear regressions models. So let's keep our eyes peeled. All right, everybody. Why don't we leave it at that? Kavarkinator, if you think we're good to go, I'll take us out. Have yourselves a great day, everybody. All the best, and bye for now.